How to properly evaluate your trading and implementing a strategy based off rules-based discretion are two topics we've been digging into pretty heavily lately. If you guys haven't done so already, make sure you check out Trading Coach Podcast episode 855 and 861 for further discussions on both. But what I want to do in today's video is follow up on those discussions and really show you how we practically apply those concepts to the live market, to show you some market analysis that we recently did in the live room where we were looking at what I consider to be a perfect trading opportunity, except for one thing. I won't spoil it, but you guys will see it. So pound dollar is coming right back down into kind of the lows of our consolidation zones. We know that we can read candlesticks and we have a structure looking left, look left structure leaves clues, but we also have these rejections that we had earlier, right? Early August and then again mid-August, and we're coming right back down to that level on the daily. We go down to the 4 hour, you can see we're right at those lows, right? If I draw a line right here, we're right at these lows and we're starting to see a rejection. This is going to be a good opportunity. Look for a counter trend trade, a counter trend structure-based trade, because price action should show us some type of battle, some type of hold, some type of fight in this level. Now, if we violate this level, then there's room to the downside, right? We got to violate these lows right here, so a little bit lower than what we're currently trading at. But if we violate these levels, there's room to the downside. But right now, I would look for a hold. So 4 hour, hourly, right? You can see price action is down at previous structure, right? We can CTS this thing. We're starting to lose momentum slowly. We have three larger bearish candles. Then we have a smaller bearish candle right here. We're currently putting in a bullish candle, right? We don't have any weak bearish candles yet, but we're currently putting in a bullish candle. RSI is oversold. This would be a perfect area to look for if you're aggressive, a higher high, higher close. If you're more conservative, a double bottom. If you're super conservative, a 26.18. And then look for an opportunity to trade it back up. If we trade it back up, where is price likely to go to? Well, the first level that stands out to me is going to be right here, with the higher level being our previous structure zone right there. So again, we can bring some fibs on, look for some confluences. We can take a fib from our lower swing here. Again, we may have to adjust this because if we push down lower. So we really want to wait until we get the true signal first. But you can see we have 50% at the first level, 618 at the second level. I do want to bring in a Fibonacci retracement from my higher swing as well. And you can see that we have some confluence at these levels as well, right? We're going to have a 50% lining up with our 618. We're going to have a 3D2 lining up with our 50%. So I wanted to follow up on our analysis from this morning, not just to show you how right we were, which we were pretty right, which is awesome, but because I think it follows up perfectly on the lesson that we spoke about earlier about process over outcome and how to correctly judge and grade yourselves on trades. So obviously the pound dollar did end up giving us a nice reversal at structure. We came up to really blast out that conservative target area we had on our radar, and we're working towards the very low, if not the higher end of our bigger target area. Now the problem was although this was a grade A trading opportunity on my radar, I was not able to take it. You see, my trading rules, and this goes back to the previous videos and podcast episodes we did on discretionary trading, my rules say that just because I like this trade doesn't mean that I can just take it wherever I want. I need to wait for a very specific entry requirement, which in this case would have been a higher high, higher close. So I had to watch this thing, right, rally from right here at 126.34, which would have been a great entry, would have given me a nice risk reward, to the close of the candle, which was up here at about 126.77. Now, it doesn't take a rocket scientist to figure this out, but if we measure out risk reward, knowing my stops were down at 25.85s, that's going to be right down here. And again, that's a rules-based reason for stops as well. For you guys that are wondering, I use ATR multiples for my stop. you can see that even if I were looking for the extreme highs of my potential prediction level, which I wasn't, I would look for lower end, but even if I were looking for the extreme highs, it just wouldn't give me a risk profile that makes sense because it's below 1-to-1, and 1-to-1 is a minimum requirement that I have. I prefer larger than 1-to-1, of course, but at minimum, I need a 1-to-1 risk reward requirement just because of my hit rate, my strike rate on trades. If it's below that, I'm going to be in a lot of trouble because I don't necessarily win that much more than 50% of the time. So this is a good example where it stinks, right? You look at this, you've done all the work of analyzing it, you're watching it, you're sacrificing other things in your life to pay attention to the chart, and you're waiting for the close, and you basically have to play the sideline while this thing prints money without you being involved, right? And there's two ways to think of this. One way, you can punish yourself. You can say that I missed out on profits, or you can even make trading mistakes where you enter early, and that leads into a whole different thing, right? We spoke about the euro yen yesterday, where euro yen was another grade A trading opportunity on my radar. We were initially looking for the same type of deal right here, a higher high, higher close entry. You can see price actually spiked higher. So at one point, this was a green candle. For someone that would have entered early right here, guess what? You would have come back to your charts and had a lot of regret, let's say that. So it's important that we stick to our rules. We wait for our reason to trade, and we don't self-sabotage. The other way to look at this is to grade yourself an A, right? You analyzed the market correctly. Boom. You made a good prediction. Boom. You were patient. You waited, even though you didn't get it, you waited for your reason for entry. Boom. You didn't make any, psychological mistakes. Boom. Give yourself a grade A trade and judge yourself on the process of doing things the right way versus the outcome, which could be looked at as missed profits. I don't even count it as missed profits because it's not missed unless it was something you were supposed to be in. But too many traders do the opposite. Too many traders punish themselves. And then if you punish yourself enough, you get tired of that feeling. And then you start taking action so you can put yourself in a position where you don't need to punish yourself. And those actions, like the euro yen, just put you in even worse scenarios. So I hope this is a great visual example. Again, we spoke about this a lot in the podcast. If you haven't done so already, make sure you go back and listen to that. But I like putting a visual twist to it as well, since as traders, we are on the charts and it's easier to see a real life opportunity kind of do this versus just talking about something that happened in the past or something hypothetical. So hope you guys enjoyed the video. As always, hit that like button. If you have any comments or questions, leave them below. I've been doing a lot of these short reels and YouTube short videos kind of answering your questions, where I take the question and I kind of respond to it in a minute or less. So if you have any questions about trading or any aspect of it or entrepreneurship or whatever you want, leave it below. I do read each and every one. I am trying to turn it into content. That way I can get it answered for you and anyone else that may be thinking or questioning the same thing. All right, hit that like button, subscribe if you haven't done so already, and make sure you check out the Trading Coach podcast, available on your favorite podcasting app. 3 new episodes each week.